All right, happy lunch hour to everybody out there. It's Gavin McGuire, event trader here, being joined by Trend Tracker, who's Craig Rapisarda, of course, one of our senior traders over here, and the man that runs the earnings desk. Craig, how are you doing today?
I'm doing pretty good, Gavin. How are you doing?
I'm doing pretty good, Just kind of watching the action here. I think I'm going to get knocked out from my S&P short here in the futures that I had on for a hedge, so I'll just keep an eye out on that to see what happens there. But so you were pretty active earlier today, and you put together a pretty nice piece that you posted under your trend ticker, TREND, of course, at 11:02. So looking to flesh that out a little bit with you and allow you to talk a little bit more in depth about it. And basically your piece was a focus on some of the frothy valuations that we're looking at in this software space. So I want to see if you just want to kind of break it down. Obviously this was in response to subscriber feedback, and provide some of your thoughts on the comments that you have.
Sure. Yeah, so like you said, somebody wrote in yesterday with a pretty good question regarding these frothy valuations we are seeing in the software space. So I gave a pretty lengthy response to the good question yesterday, and I kind of stayed up pretty late last night editing that and improving upon the response, so I could kind of put it out to everyone. So I can usually get things down on paper or write it out better than I can verbally convey the message. So I hope people do take the time to read that. But this is something that I've been focused on now for much of the year, especially more recently, because we just have so many software stocks that are trading with what previously would be considered just egregious, sort of ridiculous valuations. But I do think that in some cases, the valuations are justified. If you have,
and when you're comparing to past historical, I know in your piece that you kind of mentioned some of the late '90s valuations that we were getting, which obviously is a nice comparable for people in terms of when they thought that some valuations were getting a little bit out of hand. Correct?
Yeah, so that's what the subscriber had kind of brought up. My trading investing career kind of started in 2005, so I missed the tech bubble, to be perfectly honest. But I don't have any hard data to support it. But even a few years ago, we've had high quality cloud software stocks in the market, for the last 10 years, and I remember getting burned in FireEye in, what year was that? I just got to pull up the weekly or return chart.
Wasn't it? When it was 2014, I think, when we had
I
that
think
big
2014.
Bump, right? Yeah,
so I wrote it from 50 to 100, and I thought I was the man. And then I wasn't paying attention closely enough, I suppose, to the valuation. I think it was well over 10 times sales at the time, and I don't know what the straw was that broke the camel's back in that one. If it was disappointing, I think it was just they had a couple big beat and raises, and then that kind of stopped.
Well, the whole space was rolling over in 2014, right? I mean, that was just kind of the pulling in of a lot of those growth names. It seemed like, and pulling back on expectations, and FireEye was certainly at the middle, right?
Was that when the valuation correction was? I know we had a sharp valuation correction in a lot of these technology stocks, and I remember it. I remember early 2016. That was the whole market that really corrected pretty sharply. Maybe it was 14 too.
Spring of 2014 was my recollection.
Okay, yeah, that actually does make more sense. Yeah, so the valuation, which I kind of touched on in that piece, the valuation isn't a catalyst. It doesn't matter until it does, I guess you could say, which,
Sure. When the sentiment sours, then all of a sudden those numbers start to breathe a little life, right?
Right. If the QQQ, if the Nasdaq 100, if tech stocks start to roll over pretty hard, then we should we should try and start to exit. You know, you don't want to give up the gainers, and maybe even start trying to short the lesser quality software stocks that are trading with, you know, 10 times sales multiples. You know, it's always easier said than done to know what is a shallow pullback versus a sharp correction. So, you know, that's our job to kind of be on top of that. But for now, you know, yes, there are tons of software stocks that do have really aggressive valuations that set up seemingly difficult expectations for the companies to deliver against. But you know, if you want to make money now or all year, or you know, this month, next month, or for the rest of the year, you got to trade the market that we are given. So, you know, if you are a very disciplined investor and you think 10 times sales is crazy, then software stocks aren't for you, and I totally get that. But for me personally, where I've had the most success is recent IPOs, high quality software stocks where essentially the growth rates are the growth expectations are below where the company can deliver. You know, they're enjoying really strong secular growth trends, and you know, if the company can surprise to the upside, beat and raise every quarter, then it usually results in the stock trading higher over the intermediate or long term.
Do you find that after a certain amount of time that the expectations get a little bit higher than expected, and the analysts start kind of boosting to unattainable levels, do you find? Or
sure. Well, to be perfectly honest, you know, I guess that's why I like the recent IPOs more, because you know, obviously Salesforce, you know, they have a very visible revenue stream. You know, they've essentially, you know, beat and raised, I don't know how many quarters in a row now, you know, like 40 or something. And so it's not always going to result in a gap up on the stock trading higher, because the devil's in the details. You know, it's not as simple as I'm kind of laying it out.
Right.
But in recent IPOs, the really astute management teams, like what I referenced in that write-up, like the guys at the trade desk and like the guys at Zora, in my estimation, you know, they have, so Zora has said that they expect to grow 25 to 30% long term. Now they're growing 60% year to date, and estimates, guidance for the current quarter, so estimates for the current quarter, and even next quarter show some real deceleration in their growth. And you know, it's just based on the company's very conservative outlook, so that's why I'm expecting another sizable beat. Yeah, so you know, I guess complicit is kind of an aggressive term to use, but you know, I've mentioned this before. I could maybe go back into the archive and repost that link. I think it was a discussion between me and chart trader Brett.
Right, I remember that. That was about 2 years ago, right?
Yeah, something like that. And it's basically the takeaway was, you know, these sell-side analysts don't get paid to have the most accurate estimates. So, you know, these guys, the estimates.
There's a relationship that they have with the companies that sometimes makes it difficult, right, for them to kind of raise those estimates too high and make them unattainable.
Right. And smart, the good managers, that's what they do, is they manage expectations, right? So right. They tell the analyst essentially what they're going to do, and now the analysts likely know that it's conservative and that they're going to, you know, significantly outperform that. But again, they don't get paid by how accurate their estimate is. You know, the primary function of the sell side is to provide management access for clients. So yeah, you know, it's just a game. And the management teams that do it well, by keeping expectations low, they can deliver and present a bullish case every quarter when they, outperform the expectations. They beat and raise. That's the winning formula that I have found. So.
Right, and speaking of one that you're looking to beat and raise, we'll get into a few of these names here that you've been talking about. Ticker symbol ZUO, which you just mentioned, Zuara Inc. And correct me if I'm wrong here, but basically it's another cloud software play, subscription-based model that is basically order-to-cash process, which includes quoting, billing, collections, and analytics. If there's any more color you want to give on the business model, by all means. But earlier today you had mentioned that you're expecting to see a substantial beat and raise, which plays into what you're talking about here, right?
Yeah. So this is, basically textbook what has worked for me in the past. So it's the secular growth story here is extremely compelling. I would put it on the same level as a Pluralsight, which which I'm in, and even the Trade Desk. So it's there's a long-term, very strong shift towards this subscription business model. So obviously all these software as a service cloud stocks and companies are take advantage of the subscription business model, but even companies that aren't selling software are transforming into the business model. There's story from the Q1 calls where I talked about a utility. Essentially their software makes selling the subscription business much easier than a traditional ERP company would, like with SAP or Oracle.
Okay.
Oracle does offer a competing software as a service, but just like with a lot of these really strong niche software companies, they do one thing, they do it the best. So even though there is competition from the big guys, it comes down to who does it the best, and
right. And they're best of breed in that product. Do they have any competitors outside of? I know you mentioned Oracle, but like any other smaller names that you'd want to be keeping an eye on for sympathy?
Yeah, I think Recurly is another smaller competitor, which is kind of the same thing. They're not public, but. Like you said, I think Zuora is the best of breed. Their client list. Their client list is basically a list of all of these really strong tech IPOs that we've seen. Box, Pluralsight, DocuSign, just to name were ones that they mentioned on the call last quarter.
So they're the service to the service people.
Exactly. So the long-term growth story there is very compelling in my view, and it's the same.
And that also kind of plays into the valuations too, right? Because the idea that it's overvalued, that certainly plays in. But then when you're looking at a beat and raise, that kind of distorts the valuation a little bit, because earnings you're expecting to be better, revenue growth should be higher than what some of these estimates are, and therefore that valuation isn't always spot on, right?
Exactly. So these highest quality ones where the company has managed expectations appropriately, the out-year estimates are below where they will inevitably come in, so the stock is cheaper than it looks. And in addition to that, if you are confident in a long-term sustainable growth outlook, then my reference in that write-up was to the Trade Desk. Going back 6 or 12 months, it was only a $2-3 billion company, and I thought that they would be able to do that in revenue in not too many years from now. So a lot of these stocks do look very expensive on this year's estimates, even next year's estimates, but if they can grow 30% plus, or ideally 40% plus for a few years, one, the estimates are too low, and the terminal value can greatly exceed what what looks like an expensive stock now it would look like a cheap stock, looking back a couple of years, if that makes sense.
Yeah, no, that makes sense. And, as I said, we've got ZUO reporting later tonight with obviously that 36 level playing in a little bit of, we're looking for a breakout. And the float's short or is small at 12 million, and you had noted a 30% plus short interest in it. I had it at 43%, so we'll certainly want to keep an eye out on that. And in addition to the top and bottom line, I'm assuming we want to keep an eye out on that customers number as well as the dollar-based retention and usage metrics as well.
Sure. Yeah. I mean, I expect pretty much everything to be very strong across the board. When I put this trade on last week, I was kind of targeting. I was, being conservative, which I like to do, in saying, I think it can get back into the low 30s where it's basically trading now. But, the size of the beat and raise that I'm expecting should be able to, at least get it to test the highs that it hit back in, when was that? June.
Shortly following that Q2, the Q1 report, I should say, when it broke out above that 23 area, right?
Yeah. So I mean, it broke out on the first earnings report, and then it really ran hard. I think a lot of these software stocks were kind of running hard then. So I view down into the low to mid 20s was seemingly a gift, and now if you look at the chart, it's bounced right off of that 10-day exponential moving average last 2 days, after breaking out, what was that, Monday or Friday, after the strong Autodesk, Splunk, and Viva Systems reports. I mean, I totally get being turned off by all these valuations, but on the other end of the spectrum, these are where the best investment opportunities are. Like I said, if you think a company can grow 40-50% for many years in a row, then the stock won't be as expensive as it looks down the road.
All right. Another name that I know is on your radar that you had mentioned as well is ticker symbol is NTNX, and this is Nutanix. Am I pronouncing that right, Craig?
I think it's Nutanix, but yeah, close enough.
And yet another cloud software name, obviously. They basically are running applications for just allowing companies to put in different applications at a scale rate. So I'm assuming that's something to do with tracking, say, their Microsoft Office for use by all the employees. Do I have that correct, or is it a bit different?
I can't speak super intelligently about this one. It's a hyper-converged play. I really don't have a great feel for this one.
Okay.
My perception of it, I mean, honestly, I have a pretty decently high conviction on this one into this print, but I don't have a great feel for the company itself. It's kind of been consolidating here for
most 52 to 64 area, basically.
Yeah,
around.
They've been. I have a friend who works at CDW, and I hadn't even mentioned them. This is months ago, and he was like, "Oh, well, there are no Nutanix." So Nutanix is really coming on strong. They're doing really well, and the stock sold off. Basically, they really outperformed on the top line and guided up revenue last quarter, but the stock sold off because they reported a larger than expected net loss. They're investing for growth, which is what you want to see. It's all about the top line growth. So the estimates look very reasonable for this quarter and next quarter guidance. So I think the top line will come in strong, and the revenue guidance will likely be above estimates. The wild card is, the company kind of warned about increased costs, but I don't think that's as important as, continued strong revenue growth. So, this stock has been consolidating, and I think another strong report could send it to new highs.
Is there any names you'd be looking at for potential sympathy plays on this one?
I don't think there are any direct peers that that trade.
It's funny how much this group gets just all lumped into the same category, yet each one of their business focuses certainly seems to be different, right? It's just cloud software.
Sure.
Yet each of them do have a little bit of a different business model going in. And I guess that kind of speaks to the winners and losers potential that you're discussing, and kind of like how we saw in the internet names in the early 2000s, where it was basically every single one was a lottery ticket, and at some point there's going to be a shakeout, and there's going to be a calling for the winners and the losers. So it's going to be an interesting time.
Definitely, and so I'm putting at least my thoughts out there and the way I think about things, and I hope it helps the subscribers. But what it comes down to is identifying which ones are the winners, which ones are the losers. Stock picking, which so that's my job.
Right.
That's what I tend to be pretty decent at. So
you do a good job at it.
Thanks. So I'm trying to at least convey my method, but it still comes down to analyzing the business. How big is their market? What's the opportunity? But at least I've at least picked up on these components of these growth stories that are either green lights or red flags, or whatever, or however you want to refer to them. So yeah, I'm just looking for the strongest secular growth stories, and
right.
The valuation can sometimes get in the way. Like I did I let it get in the way in Tilray, and other, so there's only a few of these that I've really traded, or a handful of them if you go back a few years, and there's been dozens and dozens of high quality growth ones. So you can't own every stock, you can't trade every stock. So you just got to pick the ones that you like and do some research. Hope it works out, I guess.
Yeah, well, one that has worked out for you is this Plural site, ticker symbol PS. They're not up on. I don't see them on the earnings calendar. I think they just reported on August 1st, I believe, right?
Yeah, that sounds right. Yep.
So stock's obviously been moving pretty nicely since then. Their billings up 42% year over year, which is of course always a great number. Now. As per usual, they're losing money, but they did have a nice 8-cent beat, I believe, there. So another one of those software names that we're seeing that is beating the numbers. Now, when we're talking about business models, these guys basically are a cloud software business for end-to-end learning, right? So doing different kinds of training software for people, and they got another one that's got a pretty healthy customer base, right, with a number of Fortune 500 companies on their list. The company's actually been around for about 13 years. So what is it that you like in Plural site here?
Yeah, so they, they've been acquisitive in recent years, and now they really just started focusing on enterprise in the last year or two, and that's where their growth is accelerating like wildfire. So it's essentially software that trains and teaches software developers, IT professionals, and the same kind of secular themes that I kind of talked about. Software is kind of on the path to taking everything over. So more companies have more software developers, and obviously at software companies themselves, that's the bulk of their employees. Software engineers, programmers, etc. So, like you mentioned, they had, I think they have a 60% penetration at the Fortune 500, and if we just want to parse out like the FANG stocks themselves, we can assume that Facebook is one of the companies where they have at least one employee using Pluralsight. Now, I don't know if they have 10 at Facebook or 1,000 or 2,000.
Right.
I mean,
they don't break out 10% customers or anything at this point, I would think, right?
No, but you know, it's the penetration within these large software companies, not to mention just software developers at any company. It's, you know, there's software developers are in high demand. I wish I would have gotten into this space. I'm personally not a programmer. I'm not that great with computers, so it wasn't in the cards for me. But you know, that's certainly an attractive career path right now, because everything is going towards software. So, and especially in Silicon Valley, there's so much competition for these high-paying jobs. So it's easier for companies to justify, you know, a few $100s or, you know, whatever the subscription price is to keep their software developers, you know, competitive or you know, on top of their stuff, as opposed to hiring some star for however many $100,000 a year. So the long-term secular growth trend here is extremely strong. Having said that, the valuation it's not Tilray ridiculous.
Yeah.
But it's very aggressive. It's very aggressive. So I have been like really trying. I've been tempted to sell this thing all the way up. You know, it gapped up on earnings right after I bought it, and it kind of stuck there around 27 for a week or two, and then it finally kind of broke out. Now it's just been grinding higher. I don't see how there can be a ton of upside from here, at least near term, because the valuation is so aggressive. But again, you know, 20 times this year's sales, and you know, obviously the sales multiple comes down the further you go out. So again, if I think that they can do, you know, if they can sustain 40-50% growth for the next few years, I think the stock will work higher over the long term. But like I said, the valuation does sort of limit the upside. So I've done a good job in not already taking some off, but at this level, I think I should take some off, because otherwise I'm just being sort of greedy. I'm up more than 40% in, you know, what was it, a few weeks, a month. So yeah, no, it's prudent to, you know, as I'm sure you would agree, Gav, you don't want to get greedy and let too much of a profit go if it does pull back. So
yeah, I mean, it's always that battle. You know, you want to let your winners run, but you don't want to be too greedy. So right. Trimming and trailing always seems to be a nice way to go about doing it, I find.
For sure, and you know, Scott's helped me with that. And like I said, I feel lucky that I didn't get out at 20, you know, in the upper 20s, but then, you know, when it did break out above 30 to new highs, then, you know, that's kind of a green light for more of a technical approach. So I have been able to hold on to it. You know, the stock surged to a new high this morning, got up above 36, and then kind of has really given up all those gains. So yeah, I will probably, you know, I only bought a third size position, so it wasn't a big position, and you know, I feel like I should probably take a profit. I'll probably sell half of it, and then, you know, this one, and you know, just like the Trade Desk or Zuo, even MongoDB, which I bought way lower and it's up huge. I never expected it to run this far. It's something that, you know, you want to buy on a significant pullback. So when we do inevitably get some kind of correction, then you want to buy the highest quality growth stocks, right?
Yeah.
So, yeah, that's the way I think about it.
And again, for anybody who didn't catch it, Greg put together a pretty nice piece earlier on a lot of these cloud names, and in particular, there's a link in there to a spreadsheet with some of these valuations, and you do a Pluralsight is up there at second, just behind Zscaler, in that enterprise value to revenue metric that you're using as the primary sorting tool for that. Let's take a quick look at one that was in the cloud software space, but is in the payment area, which you have spoken about on the site. I believe you've taken a position in it, and that is PagSeguro, which is ticker symbol PAGS, which is basically, for the easiest way to think about it, the Brazilian Square, right, Craig?
Correct.
And they will be reporting earnings after the close today. So what are some of the things you're going to be keeping an eye out for there, and what are some of your expectations for PAGS going into tonight's print?
Sure. So, they did pre-announce their results. So there really isn't going to be, I'm not really sure why they did this, but, they pre-announced their net income, their payment volume. They didn't pre-announce revenue, but they pre-announced the payment volume and kind of the profit. So the Q2 estimates are largely known at this point. They don't issue guidance either, so
that net income number was well above expectations, right?
Yeah, it was good. It was a good way. I want to say about 10% above estimates. And the payment volume is growing triple digits. I like this one.
Were you surprised at the relatively muted response to this?
Yeah, I was. So there's two major things weighing on it, and the one has me just almost wishing I didn't have to concern myself with emerging markets and Brazil. Obviously, I'm not going to be able to get as strong of a feeling for this company as I would a U.S.-based, software company.
Just trying to understand the environment. Obviously, we've got Brazilian elections coming up, which is playing some games with the real. Brazil being the heaviest debt-denominated in dollar terms that they have, so that always makes them a tougher emerging market that gets hit. And you got the Argentina peso thing going on, so all these are playing into the sentiment around some of these Brazilian names. But I mean,
exactly,
it's still a nice looking business, though, right?
Sure, and that's obviously your cup of tea. I don't follow that stuff as closely, but obviously the real weakening and weakness in the Brazilian economy are all concerns here that have weighed on the stock. Now, I think it does set up a long-term opportunity in this stock, but again, I don't. My specialty is to focus on companies, and not only can I not get as great a feel for it because it's a Brazilian company, but I also don't have a strong opinion about the emerging markets of Brazil and either. Now, the other thing that has been weighing on it is was it PayPal bought a competitor a few months ago. So I think there is some legitimate competition concerns here, but if I do recall, there were some big hedge funds that kind of disclosed positions.
Yeah, this is definitely one of the strong names, I thought, in that 13F filings.
Yeah, and generally, so this would be, I guess it would fall into one of my other formulas that have tended to work for me when when something like this, if it's macro concerns, emerging market, Brazilian, obviously all these Brazilian stocks have gotten crushed, so it should theoretically set up a long-term opportunity in the high-quality companies, right? But yeah,
What do you think of, and does this play into any of your thoughts with Berkshire's buying of India's PayTM, which is the Indian Square for to keep it simple, as a payment system. Does that encourage you a little bit more around this investment, or are you not overly concerned with that?
No, I mean, some of the best investors in the world are involved in or acquiring assets in the space in a different country. It makes sense. I mean, look at how well Square has done, SQ, and there is a seemingly great opportunity in the space, which is why I bought it. It is a pretty small position for me now, and I don't see myself going all in like I did with the trade desk, because again, my conviction isn't ever going to be that high, and just purely on a technical, from a technical perspective too. This thing has it surged out the gate after the IPO, and now it's kind of just given all that up. When it made new lows, in June, it broke the lows from February. That's a big red flag to most technicians. I don't think that's to me that the weakness is a buying opportunity for the long term, because I focus on the fundamentals more than if it breaks a level, I'm out. If you're shorter term, then it totally makes sense to. I understand not wanting to hold something if it's not showing, the strength.
If this broke below 25, would you stick in it? Would you add?
Yeah,
anything, or yeah.
I have a small position in it, so it's something where if it continues to come in, I will do some more research and decide whether or not I want to really add, or if I can take the loss if need be. But yeah, I'm not concerned about a drawdown of a few points or 5 or 10% if I think I can buy more, and in a year or two it might be up. So one of the other reasons I really like IPOs recent IPOs is if they are strong businesses that are growing really well. It's usually now of course it's not always going to be the case, but I would be surprised if this stock, unless PayPal or some competitive reason, or unless Brazil goes into a really terrible depression, or a competitive some competitor really starts to crush them, which is certainly possible. This stock probably hasn't topped long term, and it was at 40 5 months ago. So I think patience pays off more than I know most of our traders are looking to make money today, but I have a little bit longer term perspective, so I'm not afraid of a little bit of a drawdown, as long as I still like the stock or the company. So
right, there's some names that we'll be definitely watching and looking for some follow-up thoughts as the numbers come out. That's for sure.
Sure.
So, all right, Craig. Well, I know you got to get ready and start getting together your thoughts for these earnings and get everybody prepared for the posting of these. So, any closing thoughts you'd like to add here?
Sure. There's a couple healthcare. Healthcare stocks have been doing well lately, right?
Yeah.
Biotech stocks. XBI is up 1% today. It's kind of flirting with resistance there. The XBI is like the S&P 500 biotech index or whatever, and it's kind of testing resistance there. There are a couple biotech stocks that I'm in. One that I continue to like is TTOO. I think that after another couple quarters of execution, this thing will turn into a momentum stock, and people will start chasing it. They have a big opportunity in the sepsis market after getting approval earlier this year for their medical device, and Yeah, I think this one is a good hold with a longer term perspective.
Okay.
I also recently added to that Aimune, which is a peanut allergy play.
What's the ticker?
AIMT.
Okay.
I added to it a week or two ago. And again, this isn't, I guess, fast money. These are longer-term swing/investments. But I do think the recent weakness is a buying opportunity. So, yeah, I mean, I'm never really going to have as much conviction, in a biotech or even a medical device stock.
Right.
Because I am not a doctor or a scientist. But yeah, there's a lot of great opportunities, especially in these smaller cap healthcare companies. Just like in software, there are some medical device stocks that trade with some pretty aggressive valuations. I think like ALGN, Intuitive Surgical, are some of the bigger leaders, but there's a lot of smaller cap ones that trade at really aggressive multiples. So there's opportunity there too.
Okay, and real quick, Craig, somebody in feedback was asking about Sono, which I know you've been talking about. Are you involved with that one? Or?
Yeah, no, that's a good question. I do like Sono a lot. I have that one. I added to it when it started to break out last week, 2 weeks ago. This is I don't think it's a fad like Fitbit and GoPro were. Both of those stocks or companies were growing faster than Sonos is now, and they surged, and now they're trading at less than, and they fell by the wayside after disappointing 1 or 2 quarters in a row, and they've kind of been sort of dead money ever since. They're both trading, GoPro and Fitbit are both trading at less than 1x sales. Now, Sonos is trading at like 1.5 times sales. I think it's a steadier, longer term growth opportunity. So
yeah, I mean, home theater, everybody's in on that, right? And as you mentioned, Best Buy, their home theater division did pretty good this quarter, right?
Yes, and as we know, the consumer is really strong. The expectation, so this nobody really wanted this IPO because people just sort of assume. And I normally am totally on board with the idea. Why buy some speaker hardware company that is inevitably going to see competition, or I want to see sustainable long-term sales growth, but at the valuation that we have now, 1.5 times sales, all it takes is a good quarter or two, and the stock could double, or
right?
At least or go up 50%.
And do they have an Amazon deal?
Yeah. So their newest product has Alexa built in to their speaker system.
Okay.
So that alone, I mean, this comes down to the very reasonable valuation and relatively low expectations. It essentially comes down to the holiday season, right? So they're going to report their first quarter as a public company September 10th, which is Monday, the Monday after Labor Day, and I assume that they will. The expectations are low for the current quarter, and they firm up. Expectations a little higher for the following quarter because of the new device with the new speaker system with
and I
with
think the
Alexa.
holiday season's got to be huge for them too with that quarter.
Exactly. Well, so that's not going to be the holiday season yet. So they're going to be going for the October quarter. Is it October? No, September quarter. And then obviously it's the Q4. It's their fiscal Q1. Doesn't really matter. The December quarter, where their sales are expected to pretty much double, quarter over quarter from Q3 to Q4, because like you said, it's a holiday season. So that's going to be the big determinant. If they beat estimates next Monday, what is that? 10 days from now, 11 days from now, and the guidance for the September quarter is just okay. It's in line or something. Maybe the stock gets hit, but what's really gonna there's a decent chance that if the stock is weak, that I could buy more leading into the holiday quarter. You know, I'm not. It's not like one of those, like a Pluralsight, where I have a high conviction that it's going to be a really strong beat and raise, and that we're going to get a good gap up on that first report.
Right.
But I do have pretty good conviction that this thing will get back into the 20s. Yeah, you know, so you know, there's Fitbit and GoPro, which are the examples of fads that didn't work out and they've kind of been left for dead, where Logitech and Garmin are hardware companies that have been able to sustain their growth, and they do trade at you know, multiples that would make Sonos look attractive. See here, places sales. Garmin trades at, you know, almost 4 times sales. Logitech trades at almost 3 times sales. And again, a good quarter or two, and this thing will shoot up pretty quick. There's a small float. I'm not sure what the short interest is off the top of my head, but you know, it just comes down to very reasonable expectations, low estimates, and that I think is a favorable setup here in this one.
All right, perfect. All right, well, Craig, thanks a lot for coming on and joining us today. I'm sure I know that the users are definitely looking for you to come on more often, so we'll, as we discussed in the past, look to get you on a little bit more to get your thoughts in, because you definitely get your thumb on the hot pulses going on in the different areas. So certainly appreciate you discussing some of your thoughts on some of these names. Hopefully you helped people understand a little bit better your investment style, as well as some of the reasons why you like these names. I think you did a pretty good job at laying it out. And again, for anybody interested, Craig posted 2 really nice comments earlier kind of discussing this entire valuation area, and has a pretty handy chart that lays out a lot of the names that we're going to want to be following over the next couple of months as they remain at the forefront of this market rally here. So, Craig, thanks again for coming on, and we'll talk to you soon.
Thanks for having me, Gav. I appreciate the kind words.
No problem at all, man. We'll talk to you soon.
All right, sounds good.